everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here I am, John Sneisen. And as the dreadful Huffington Post says, and we will elaborate on it, I assure you, they say Toronto houses are losing value at a rate of $100,000 a month, and prices have fallen by a quarter since the market peaked in April. And as the article goes on to say, many market analysts have declared that the party's over in Toronto's real estate market. Nowhere is that clearer than in the city's detached home market, where the average price has fallen by nearly $400,000 in the space of 4 months. An average single-family home in the city of Toronto went for $1.191 million in August, the city's real estate board reported Wednesday. That's a drop of nearly $388,000 or 24.5% since April, when Ontario's government announced a new foreign speculators tax and other measures meant to cool the housing market. The price of a detached home in Toronto is now 1.2% lower than it was a year ago. Detached home prices in Toronto's suburban 905 region are also falling, down 19.3% since they peaked in March to $906,592 on average. Overall, the data paints a picture of a significantly softer housing market than was the case just several months ago. Sales were down 34.8% in August compared to the same month a year ago. So the party is definitely over in Toronto's housing market. For good, who knows? All we know is that we've seen a bubble expanding and expanding and expanding, and this was bound to happen eventually. I expect it to fall significantly lower, I'm sure, in the coming year. I think it's a good sign of the bubble that was inflating when they're talking about how it's just a little bit higher than it was a year ago. I mean, the market has just been going upward more, and now it's almost like it was almost a straight line up, which is just insane, and now it's dropped about 25%. So just since April. So John, can you go into what exactly is happening in the Toronto housing market?
Well, what it's seeing is the cut of the rise of the interest rate that Bank of Canada has put forward. That's one of the number one things that are pushing the prices down. And what we're going to see soon is people that had variable mortgages, they're going to actually start struggling because you're up 50 basis points, like 0.5%. On your interest, and the banks are of course hiking their interest as well, together with the Bank of Canada. What you're going to see is the cooling, and then after that you're going to see people really starting to struggle, going into foreclosure and so on. And now the foreclosure process is very long here in Canada compared to the United States. And so you're going to not see the results right away, but they're coming down the pipeline. Now also, what we saw with BMO issuing that $2 billion in mortgage-backed securities, that's pretty interesting how they issued it at the Toronto side of it. Issued it, just a little bit before things are starting to unravel here. And we heeded the warning, and we said, listen, this is exactly what the banks did in 2006, 2007. They issued all of these mortgage-backed securities, and then of course people saw what was happening, and then they bet against them. A lot of people made millions.
Yeah, well, play stupid games, win stupid prizes. A lot of these people are just like, with no knowledge of the real estate market, just heard the news go, the real estate market is booming, it's getting better all the time, invest now, you will make so much money. These people think your house is an asset, which it is not. And they get in and they lose practically everything. And I mean, right now, imagine the panic of a lot of the people who got in recently, who are now looking at this price crashing, and they're going, what's going to happen next? And as you mentioned, there's a collateralized debt obligations, there's mortgage-backed securities, there's the credit default swaps. I mean, we've gone into this how many times before, John, and we try to warn people, but people don't want to listen.
Well, the biggest problem is not that, actually. It's people that believe that their house was an ATM. That is going to be the biggest problem, because now with the house prices dropping, now they're going to be in negative equity. A lot of them that are always used to refinance, mortgage up to the ceiling, and now suddenly those people are going to see that they're going to be in negative equity, and they're literally on their track to insolvency with their house. The thing is, you gotta always remember, we're not bashing, investing in housing. Be very smart a lot of times, but you have to be a savvy investor. You have to know the things that you're investing.
Don't just
if you don't
listen to people on TV and go, oh, they said something, so I'm just gonna go and do something without any knowledge.
Yeah, that's the biggest problem. People are just emotional. They want to get involved without any knowledge.
Yep.
And they're not willing, like some of our friends and people that we know that have used hundreds of thousands, some of them, to actually get to understand really how housing market works and how we could really make a lot of money on it in a safe way, and not in an erratic emotional way that we've seen with Vancouver now. And Toronto, that are really, Vancouver of course bounced up again, but we're gonna see them come down. Just wait and see. But Toronto's really seeing this big down, in their market, and I believe that the government is probably gonna try to get in and interfere and try to do nefarious things, add different benefits to try to get more people involved in real estate. Who knows? But it's not a good thing. We're seeing the big tremors in Toronto.
Well, absolutely, and we've seen people like, we've interviewed Robert Kiyosaki, we've interviewed Stefan Arnio, who both, they understand the market.
And Russ, not to forget our buddy
Russ.
Russ.
Of course, Russell Gray, from the real estate guys, great guy, really interesting, really smart, and that's what you need when you get into that kind of industry. And just going into what I was saying before, John, we've warned of this so many times before. We've done so many reports on Toronto's housing market. We've done so many reports on Vancouver's real estate market. We've done so many reports on so many of these cities and towns and areas where we're seeing the same thing happen. And of course, Vancouver is going to go in the same direction. Toronto, what we're seeing is exactly what we said would happen. People only have to look back a few months, and a few months before that, and a few months before that, to see us say this is going to happen. And of course, it's not all because of the credit default swaps and the collateralized debt obligations and the mortgage-backed securities and all that, but that's a big part of it. And in a video we did not that long ago, we broke down how BMO was reintroducing that, and it's exactly what we saw before the big housing crash in 2007. And Wells Fargo is offering very similar, implementations, and I think it should be worrying most people.
Yeah. Well, it's a way of...
People have to do their own due diligence.
Yeah, well, it's a way of passing the risk on to other investors, to pension funds and so on. So the banks sit in the clear and could just collect the paycheck. Now, there's massive problems with housing. The thing is here, let's put forward this lesson. The thing is here, do your due diligence. Understand, what you're investing in. Don't just, have a house and think it's an ATM. That's a terrible, terrible, terrible idea. Because you didn't have the knowledge that your house was not an asset. Read up on Robert Kiyosaki, Stefan Arnio, Russell Gray stuff. If you want to get involved, like you can still get involved in real estate. You just really have to understand how to properly, position yourself and use real estate, because it can make you mega wealthy, but you have to understand these massive risks that are in certain markets, and you need to be able to move around and reshuffle your portfolio if you have to, and don't just invest in one asset. Make sure you diversify into gold, silver, other land, agricultural industry and cryptocurrency. There's so many different assets types.
Be the landlord, don't be the rentee, and I mean that's a big part of it. And I see so many people, these couples, that they're like, ooh, let's go and fix some houses up and sell them for a little bit more, and because they watched Homes on Homes or whatever on Home and Garden television, or they saw like two guys fixing up homes on TV, and they're like, oh, well, we're going to do that. We have no knowledge of the market at all, but we're just going to go and buy homes and sell them for a little bit more expensive. It's just not nonsensical if you don't understand the market itself. It's so irresponsible. And unfortunately, a lot of these people will reap what they sow.
Again, it's knowledge, right? So these people might, thrive during a boom, massive boom, right? But then suddenly they are caught, like Russ actually was caught.
I call it dumb luck.
Yeah, well, Russ, our friend Russell Gray, he was caught. He lost a whole bunch of money because he wasn't aware of what happened. So he educated himself, and now he's
brilliant.
positioned so much better.
Yeah, absolutely. So John, let's say the next year trajectory. where do you think it's going?
Well, I think that, as I said, the government is probably going to try to do something to intervene to try to, you know, because they don't want home prices to go down, because their property tax will go down with it, right? So it's a huge loss of revenue from the government. So the government
manipulate.
Yeah, the government wants your value to go up, and the central bank wants your value to go up, because you believe that, you know, Canada is a great economy and everything is good, until, you know, that big bubble pop. And we're going to see another, you know, the property prices in Toronto are probably, you know, we're probably looking at least 50%, maybe more, you know, as a correction that has to happen, because it's just insanely overvalued, a lot of the housing there.
Absolutely. Buy at the bottom, if anything. I mean, really, in my opinion, you don't want to be getting involved right now.
So real estate, it's all about cycles. If you understand those, you can make yourself very wealthy.
Well, I see some people going, oh, well, it's dipped now, so it's low, so let's buy in now and it'll go up higher. That is just stupidity, folks. Just really start to understand the market instead of just, you know, going on dumb luck and hoping that your wishes will come true, because it all depends on you as an individual being responsible, financially responsible, and responsible with your education. Take that time to read into this stuff instead of just basing everything on what someone on CBC Market Watch says or whatever.
Yeah, the thing is, you can make money usually in any type of market. If it's depression or whatever it is, if you understand how money works and how investments work, you could, you know, always win. You just got to educate yourself. It's a lot of money, it's a lot of time and effort that you got to put into it. But if you're not willing to do that, then don't blame anybody else but yourself if you are caught in any trouble.
Yeah, absolutely. The market is always right when it's not rigged too. So that's another thing to consider. But I guess the bottom line is be smart. It's a pretty simple bottom line. And we've got a lot more videos on this subject that you guys can look into and educate yourself on. But don't just listen to us. Do the due diligence, read the market fundamentals and understand them.
Yeah, get to know the guys that we just mentioned in our videos. And they are experts on this field and have made a tremendous amount of money. And have been through the ups and downs in markets and survived them. So yeah, just go out. If you want to get involved in real estate, like, take it seriously and, you know, get educated. And
I also want to mention one more name, Anna Pashenta, who I interviewed in Vegas at Freedom Fest last month. But anyway,
the anarchist real estate guy.
Yeah, well, there's a lot of them, because a lot of them understand the realities there. But anyways, until next time, thanks for watching, everyone. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
be the change.
Now to sound like an auctioneer. Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized and censored by YouTube as they bring in the Anti-Defamation League to flag all of our content as hate speech. Also check our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. And don't forget to check me out at Josh Sigurdson at Steemit.com. That's Steemit.com, the future of social media, where you get paid via cryptocurrency, Steem that is, by the upvote and demand of your post. It's bound to take out the dinosaur social media, so I hope to see you there. But until next time, check out this word from our sponsor.
Are you looking to exchange a large amount of US dollars? Don't overpay with the bank on currency exchange. Think outside the bank. Banks charge unnecessary fees of up to 3%. Truth be told, currency exchange with the bank will cost you hundreds to thousands of dollars. Start saving now. Step 1. Register online. Visit our website and click Get Started. Step 2. Book a transaction. Phone us for a quote and to complete the transaction. We'll need to know which currencies you are converting and how much. Step 3. Transfer of funds. Once you confirm the transaction, we initiate an electronic funds transfer from the account that you choose. Your purchased funds are then transferred back to you in the account that you choose within 1 business day. It's that easy. Start saving hundreds of dollars on currency exchange with CBCE. Sign up online or give us a call today.